Welcome to the daily update for Wednesday, February 9th, where we'll look at the action in the market today and then see how things look for Thursday, February 10th. It was a pretty positive day. We saw the futures pretty strong overnight. Asia had a good day. Europe had a good day. That carried over into the US session, and we ended up opening about 1% higher. And we pretty much stayed right in that area for the rest of the day and closed right at about the highs. Now, if you are a trend-based trader and you were looking to go long, you probably would have waited until the close. That's usually what I try to tell people to do. That's what I do myself. But you're like, wait a minute, shouldn't we have taken advantage of that gap higher right at the open? Yes, you could. But what you see a lot of times is when there's a gap higher or lower, there's an attempt to fill the gap. And sometimes when that gap gets filled, instead of turning around and going in the other direction, the trend and the whole climate has changed and we end up going in the opposite direction of the open. That's why I like to wait until the close. So that's my rationale behind that, because there's few things as frustrating to me as getting into a position and then immediately seeing a loss. I like to go in the direction of the trend. If I'm looking to go long, I want to get in as things go higher. And then the inverse of that is true when I'm going short. That's just my own personal philosophy. It goes against what most people think by setting limit orders below a certain price if you're looking to go long. That makes no sense to me. I understand it. Yeah, you feel like you're getting something at a cheaper price. But at the same time, if prices come down and are at a lower level when you get in, well, maybe the situation's changed now. And instead of being in an uptrend, you're now in a downtrend. And I've had that happen over the years. And so I've just said, no, we want to go with the trend even when we're entering. That's just my own philosophy, and you may disagree with that. Okay, so let's recap what happened on Wednesday. We did have a 1% gap higher, and we were actually above R2 at the open. And then we pretty much saw sideways action, and I'll go through the chart here in just a moment. As the day went on, we didn't see a lot of increase in buying. We didn't see a lot of increase in selling. So we just drifted sideways for the most part. Then as the day got closer to the end, we did see some selling, but once prices dropped, there were buyers to come in and push prices back up. So we closed near the high for the day and we were up 1.45%. So it was a good, healthy day. And we're seeing what potentially could be a breakout. And I'll go through that. One thing to be aware of, and this could be negative, is volume was below average. Now, one reason to explain that is Thursday is going to see a really, really important economic report that's going to come out at 8:30 Eastern time, and that is the CPI, and that will have the inflation rate. And there's a lot of speculation right now about what that might tell us. There were a couple of people on the FOMC committee that, and really that's a redundant term because the C in FOMC means committee, but one of the non-voting members gave an interview on CNBC and said, no, we're looking at 3, maybe 4 rate hikes. Then one of the voting members also said, well, I think inflation is going to moderate as we go throughout the year. Whether that's true or not, who knows, but the market used that as an excuse to go higher and stay higher once we opened. One of the things that I want to point out is I go by what I'm seeing on the charts, and it just amazes me how many times when we see things come together and prices are moving in a certain direction, and then news comes from the outside to pretty much confirm what we're seeing in the charts. A lot of people think it's the other way around, that the news comes out and then price tends to react to that. And there are times when that happens. But for the most part, we can see things developing before they actually happen. And then what's happening in the world and what its impact is on the market, it will just justify prices continuing to go in the direction that they were already going or what the charts were suggesting that they would do. I've seen that I can't even begin to count how many times. The fixation right now in the market is that we are seeing improved technicals. And you'll see that as I go through the charts. We do have a lot of earnings that are still coming out. Inflation is really the big focus right now. And with inflation comes interest rates. And that's probably going to have some kind of an impact on in Thursday's session. We do have the geopolitical concerns, mainly with the talks going on in Vienna between Iran about the nuclear deal and the sanctions and so forth. That's really having an impact on oil and could have longer term implications on US foreign policy. We have the Olympics, which can often be very heavily politically charged. And then we have the ongoing, are they, aren't they going to invade, as far as Russia and Ukraine are concerned. And then, of course, we have the CPI coming out on Thursday. So what can we take away as far as the comments from Wednesday's session? We might be seeing a short and intermediate term breakout. We do have some resistance overhead, and we're right at, I use this word later, at an inflection point where either we're going to stop right about where we are, you can make a case for that, and turn and go back down, or if the markets can stay a little more positive, we might have the buying power to push us up above these different inflection points that we're seeing. You can make a case for either side right now. I'm leaning right now more towards the positive side. Now, if the CPI comes out and it's way, way above expectations and it's freaking out the stock market and interest rates are just going sky high, yeah, then I'll have to switch over and be more negative. But right now, it's looking more positive. We do have some short-term overhead resistance at about 45.92. When I get to the intraday chart, you'll see that there's a line that I drew, my gosh, a couple of weeks ago. We're coming back up to that line, and we're seeing that be kind of an important thing. We are seeing a real convergence of technical signals, meaning a lot of the pivot points, a lot of the overhead resistance, a lot of areas where we're camped right now could suggest a move either way. Well, we have more of a positive backdrop right now. So my personal stance right now, until there's evidence to suggest otherwise, is we are looking more positive. However, in a longer term view, we are overvalued and have been overvalued for a long time and will probably be overvalued for a long time. The trend, we are seeing a weakening trend. The trend that we've been seeing over the last couple of weeks was getting stronger as we were going down. Well, as we're turning and starting to go back up, that trend is starting to weaken and drop, and we don't know yet. Is that going to move us more into some sideways action, or are we going to see the ADX really improve and start to signal an uptrend? We don't know at this time. We can just watch and see what happens and then be ready for it if those things do end up happening. But the bias and the momentum right now are positive. I switched those from being mixed. We're looking a lot more positive right now. So let's look at the day's session as far as sentiment. With all of the different fear and greed calculations that are used, we're not showing an extreme reading right now, and we're just in about the middle as far as this chart is concerned. Looking at the VIX, we're seeing the VIX really dropping on a closing basis, and we're getting down. We've actually dropped a little bit below 20, and that has usually been historically the upward boundary for when it's above 20, that's showing excessive fear, where we're now dropping below that. The bar chart then is just showing a decline right now, and we closed kind of near the low of the session, but not a real big move in the VIX. The VIX, on the VIX, is also showing a bit of a decline. In fact, actually it closed a little bit up on Wednesday versus Tuesday, but this is dropping below the moving averages, both on the top and on the bottom chart. So we are seeing a lessening of the overall fear in the markets right now. As far as our sectors, every sector was positive on Wednesday. Communication, real estate, and then tech, which had been suffering and has been bouncing all over the place. It had a really good day. The staples, which is more of a value play, even that was up slightly. So we saw more across the board positive sectors on Wednesday. And then way over on the left, we have energy. And again, this goes back to the January highs and how have things performed since then. Energy's been doing really well, but as I pointed out in yesterday's video, on a relative basis and a longer term basis, it still has a long way to go before it shifts over positive. Then discretionary all the way over on the right. These are things that people would just like to have, but don't have to have. That second car, that vacation home, the jet ski, those types of things. It saw a bit of an improvement on Wednesday, but is still down since the January highs. As far as inflation, we did see a move up in the BDI, but we're still trying to figure out, is this chart even useful to us? As far as the technical alerts, they were all positive. And starting at the bottom, first, the Nasdaq went over 14.2, then 14.3, then 14.4. The staples had a bullish percent index cross above 70. Again, that's more of a value play, though, not a growth play. The NYSE BPI went back above 50. When we're above 50, that's considered positive. When we're below 50, that's negative. Materials, which again is another value play, went above 50, as well as the cyclicals. So a lot of the value stocks are still showing some strength. That really can feed into the growth scenario where we see these explosive moves to the upside in the big tech stocks. Looking intraday, way over on the right, here's the gap from Tuesday's close to Wednesday's open. And we opened right at about R2, danced along that line, and really didn't do much after that. We tried to go up a little bit, only to see some selling. If some real selling by the professionals was going to happen, it probably would have happened here. But we didn't see that. We ended up seeing some buying going into the close. We didn't close at the high, but we were right near the high for the day. Then, as this draws out in a daily chart, I drew a little line here with this short-term resistance. If I go back here, do you see this black line? I had that line on here a few weeks ago. And for whatever reason, this seems to be an important line. We came right up to this line after it was already on the chart before. Well, we're back into this territory again. So we want to see prices push above, up into the 45.95 level and stay above that, not be met with increased selling. We want to see this really push things higher if this breakout is going to get some legs. Then we're still above the intermediate term support, so we're comfortably above that. But you can see we're coming back up into familiar territory here, and we have some overhead resistance, previous pivot days, previous lows, other things that have been happening. The previous high set a few days ago, this could really produce a real battle of the bulls against the bears at this point. And you'll see that reflected in some of the other charts as I go through these. We're down since the highs on a closing basis. We're down 4.37%. So still just a minor correction at this point. Nothing has turned significant. You've got a lot of people that turned really pessimistic as we were going down here. That got to an extreme reading. And so now we're starting to see more of a bounce out of that. Growth was up slightly. Value was down slightly, even though the sector overall was still positive. Then looking at this other chart that I'm going to start including, this is a longer term view of, and using something different. This is the growth index divided by the value index. And you can see where the growth has been declining. We've seen some increase in strength. We're still below this moving average, but the moving average is ever so slightly still going a bit higher. So yeah, we've dropped below this. We haven't come back to these lows that were set earlier in 2021. So we want to see if there's going to be a real powerful move to the upside. We want this to break above the moving average. If we want to see everything break down, then we like what's happening here, and we want to see prices turn down and this moving average turn down as well. The Nasdaq 100 against the S&P, because it's heavily laden with tech stocks, we saw the Nasdaq 100 outperform the S&P 500 on Wednesday. As far as our trend, this is what I'm talking about here, where we were seeing a trend, but you see this red line was way up here, and we got to an extreme point. Well, that's been coming down, and the green line has been chopping its way higher. So we're seeing the ADX overall start to roll over. If these lines can cross, if the green line can come back above the red line and cross, and then we see this thing turn back up, that would signal that we're in a trend and it's positive. If we don't get above this short-term resistance that we're hitting right now, and we start to go back down, this could also turn back up if the red line turns back up, and that would signal more of a negative trend. Then our mass index, which this is what I brought up in yesterday's video for the first time. We crossed above 27. That's point number one to be aware of. When it comes back down to this dotted red line, which is at 26.5, that's when a signal is generated. And again, this doesn't tell us the direction. It just tells us the strength of what's happening. Where if you look in the past, you can see once we saw these signals, sometimes we've seen a move to the downside, sometimes we've seen a move to the upside. But if this can drop back down, whatever direction we're going, we can look to see a change happening at that point. Then this is another new screenshot that I have. This is from stockcharts.com, and they work closely with another outfit that I've been working with these guys longer than I can even think. It's called Decision Point. And when I mentioned the Swinlin short-term oscillator, it's Carl Swinlin and now his daughter, Erin something, who managed this site. And he created the PMO. He created a lot of the studies that I go through every day. And real nice guy, really been in technical analysis for a long time. Well, they post a lot of interesting indicators that I've looked at over the years. Well, they also have some trend models, both short, intermediate, and long-term, where based on their trend models, for short-term and intermediate term, we are neutral. The long-term, ever since June 11th of 2020, has been up. The PMO signals, which I tend to focus on a little bit more, we switched over and in the short term are now looking positive. And I'll show you that on the chart here in just a moment. Intermediate term is still in a downtrend, but the long term continues to be in an uptrend and has been since August 31st of 2020. So let's look at our breadth. We saw a real increase based on price and volume. So we're seeing a turn up. Overall, we're still below this moving average, even though the volume calculation is advancing. We want to see this break above this if you're positive, and then see the red line start to go higher. The ADX ratio, the average decline ratio, because we had an update, it is green and going, or excuse me, there's no green on the chart. It is blue and going higher, and we're above the red line right now. So that's more positive and not necessarily showing an extreme reading at this point. New highs and new lows, we did see a breakout in new highs, so that is helping our moving average look better. And then our 10-day moving average is also continuing to go higher. The accumulation distribution, that's when we're going higher, and then distribution is when we're going lower. So this blue line continues to advance, and the red line, we're above the red line, and the moving average is starting to turn up and go higher as well. That is more positive. As far as our short-term indicators, we broke above the 20, but we broke above this before. And this is some of the overhead resistance that I'm talking about, right in here. We need to see a break above this if we're going to switch back to being positive. If we hit this and go down, that resistance could knock us backward. But right now, this is looking more positive. And we're seeing the blue moving average, which is the exponential moving average. It calculates faster than the red line, which is the simple moving average. The blue line has crossed above the red line. Looking at our moving averages in the 20-day, they're advancing, 50-day advancing, 200-day advancing. Other moving averages were just slightly above what had been overhead resistance, but we still have some resistance ahead of us, especially with this 50-period moving average. The 50-period moving average is heavily used in technical analysis. So you have millions of people out there looking at this, waiting to see what will happen. Are we going to come up to this and stop? Are we going to come up to this and turn and go the other way? Or if we come up to this, are we going to be able to break through that? That's kind of what everybody's wondering right now. The MACD continues to be positive. So that's part of our positive backdrop too. The STO, this is the Carl Swinland indicator I was talking about. It pretty much chops sideways, both based on price and volume, because it's seen, we've been here before. This is familiar territory right now. And so it's kind of picking up on this, saying we really haven't done anything new yet. If we break out this way, then you would see these indicators start to turn up. McClellan oscillator is positive and getting near kind of an extreme positive reading. The Stochh RSI, which moves all over the place, even when nothing happens, we're in extreme positive territory. And the Williams percent R, which is also pretty sensitive, it's in extreme positive territory. But we could stay this way for a long time. Just because we're here doesn't mean everything's going to magically switch. Our intermediate term, we're right up dealing with this 50-period moving average. We've already crossed above the exponential moving average. And there's this big tug of war goes back and forth. And in my classes, I tell this story about what I went through when asking a question about what's better, simple moving averages or exponential moving averages. And I have a whole story that I tell about that. But we've broken above the exponential. Now we have to see, can we get above the simple moving averages? Then this is the first time I'm including this chart. This is the 100-day. And because we've been going sideways, that's when I tend to look at this moving average. I usually go from the 50 to the 200. Well, when we're chopping, that's when I start looking at the 100. Well, we've been able to break above both the simple and exponential moving average based on 100 periods. So that is another positive sign. The PMO, yeah, it's turning positive. That's why they gave the signal back on the screenshot that I showed. Based on price and volume have crossed positive. So that's looking pretty good. The other PMO study that we look at, those that are rising, yeah, we're getting up into what could be extreme positive territory, but this has more room to run to the upside if that's what's going to happen. Those that are giving buy signals is improving, and those that are above zero is also showing a bit of improvement as it turns up slightly. BPI, we didn't see anything as we were chopping sideways, which can be expected, but with the gap higher open and being able to maintain that, we saw an increase in the bullish percent index. But we're not seeing a change yet on the point and figure chart of the S&P itself. These are point and figure charts of the stocks inside of the S&P 500. Our moving average rainbow, the blue is crossing below the red, but we're still inside of this with overhead resistance still above current prices. The RSI, no, stochastics, sorry, short-term stochastics were extreme positive, but we could stay up here for a while. Intermediate term, we're getting close to extreme. Long term, we actually are rolling over just slightly, but this is still positive overall, and we're right at about the midpoint right now. We want to see this go a little bit higher for this to continue to be positive. The summation index has turned up based on price and volume, so that's looking pretty healthy right now. All of our momentum oscillators are positive now. And these are more intermediate term, kind of in the middle, and they're looking positive. The two next ones are more longer term. They're crossing positive. And the short term ones, they are also crossing positive as well. Then this is one negative point that, and some of this may have to do with just how this indicator is calculated. We had a pretty strong up day on Wednesday, but the CMF, the Chaikin money flow, actually went down. It's still positive, but it actually declined a little bit. It may be because we're dealing a lot with where we've already been, and we've been in these levels before. And so the CMF is saying, well, there's nothing really new happening here. This is familiar territory. Then this is one that I pointed out yesterday. This is the Pring bottom fissure, where we were just about ready to cross positive after yesterday's session. Well, we have now crossed positive. And you can see in the past, this is pretty good at finding bottoms. And then you can see in the past, when we've crossed, what has happened, either in the short term or in the longer term. Doesn't mean that we move right away, but eventually prices do end up breaking to the upside. So this is more of a positive backdrop. One thing to be aware of is the 10-day rate of change. We're showing an extreme reading. And we could go higher than this, or we might chop a little bit sideways, because we're getting back down into some of these areas that we've been in before, and some of these lower areas in the calculation, and it's picking that up. And so it's seeing this more of an extreme, as an extreme move. But again, just something to be aware of, not necessarily that we use this to make decisions. The CCI is also improving and starting to get in extreme positive territory. And the RSI, which I haven't shown in a few days, I wanted to show it this time because we've now crossed above 50, which overall is positive, and we're not showing an extreme reading currently. The vortex, which I also haven't shown, we're right about at the 0 level. You want to have a definition of a real inflection point. We're seeing selling coming down and buying coming up, and they're meeting just at about 0. So this is saying that the market is getting ready to do something. Right now, we would lean more towards the positive camp, but that could change. As far as our trading systems, we went back to positive on the elder system, and we were able to go above the moving average. So that's more positive. And our SAR continues to be positive as well. As far as our different charts, we're getting back up to show this potential overhead resistance with the Heiken Ashi chart. The Kegi did draw a little new black squiggly line in there, so that's positive. But the Renko has, because it's seeing that past action that we've already been in recently, this has not changed. The 3-line break added another little box after Wednesday's action, so that's positive. And the equivolume, it's also showing us pretty much the same thing, where we need to break out above this if things are going to go positive, or they need to break down if things are going to turn negative. Another scenario to be aware of is, okay, what if we camp out along here for a while? That is very possible. So we have to allow for all 3 scenarios at the same time. From here, what can prices do? Only 3 things. They can go up, they can go down, or they can stay the same, which means sideways. So we have to be prepared for any of these scenarios all at the same time. Point and figure still looks the same, and the last signal that it generated is a double top breakout. There's no X's and O's like a football chart here that have been drawn in the point and figure. A long-term chart, I don't really have any to show you. I went through a lot of those yesterday in the video, and I'm going to save a lot of those for the weekend. When I look at my Rumble account and the YouTube account, I'm getting so many more views on the weekends than I do during the week, which kind of defeats what I'm trying to do here, because really to get the full advantage of what I'm doing, you need to watch the videos every day. Because when I do today's video, I assumed you've watched yesterday's video. And so people are missing some of the context that I'm talking about. I know these videos are not the shortest in the world. I'm a believer in I need to talk as long as it takes for me to finish what I'm talking about. If I can do that in 3 minutes, I'll do it in 3 minutes. If it takes me 40 minutes, I'll spend 40 minutes doing it. I've spent my whole life as an educator doing things that way. And I feel it's led to a lot more success. Anyway, that's end of sermon right there. So as far as our indexes, we're seeing a bit of a breakout in the S&P with overhead resistance. We did see a really nice, juicy breakout, potential breakout with the mid caps. Now, this is a breakout. When I say potential, I mean, can it continue to go higher? And we're also seeing the small caps try to break out of this sideways range that it's been in for numerous days now. So if we look back at this, let's say a few weeks from now or a few months from now, will this be a base that we came up out of? Yeah, it could form a base as we were chopping around sideways. If we end up going back lower, this could be just a plateau that we waited at for a little while until we resumed the downtrend. One thing to be aware of too with the FANG stocks, these are the tech stocks. We're crossing over with the death cross on this chart with the 50 and 200. We did have a pretty good up day. We're up almost 2.5%, but we're bouncing around for the most part. We're not really showing any trend to the upside currently or real breakdown to the downside. ARK had a good day. It was up over 5% as it's seen really massive decline since its all-time high. The industrials, this is positive. We were able to break above this sideways action. We're above the 50 and above the 200, and we're above the pivot. So the Dow is looking positive, but we've been treading sideways quite a bit. Small caps, look, this is what I'm talking about, the inflection point. Boom, we closed right at the pivot point for the month of February. So we could go higher from here, we could break down and go lower from here. It shows real indecisiveness, but on a trend basis, we see the 50 below the 200. Now that could always turn back up if we go higher, or if we break down, that will just confirm that we are in a more downtrend as far as the small caps are concerned. And then with the mid caps, we're seeing also the moving averages are coming together. We were at the pivot point on Tuesday, but on Wednesday, we were able to break above that. Well, can prices break above 27.21-ish above today's close, or 27.30 or so with these moving averages, and really start to turn higher? This is part of the inflection point that I'm talking about. Then as far as the Nasdaq, we are just a little bit above the pivot with the averages coming down. We want to see some renewed strength if we're going higher. If we end up going sideways to down, you're going to see these moving averages cross, and that'd be a negative cross. Nasdaq 100, we are right at the pivot. Isn't it interesting how this is playing out? And the pivot is right at the 200-day moving average. You see how all these things come together? This is why I look at so many different charts, and this is why I don't pay attention really to the financial media all that much, because everything I need to see is right here. I might listen to some people to get some perspective or some insight, or maybe something I didn't think of, or maybe to explain something if I see something weird happening, but everything's right here in front of us. All right. Then as far as the Vixen, it is really dropping negative, and we closed near the lows for that on Wednesday for that indicator. So that could be positive, but we still want to break above this previous high if things are, I'm sorry. Yeah, this is the Nasdaq one. I'm getting this confused here. We want to break above this if we want to see things turn more positive, and we want to see this go lower. If we're positive. Then the NYSE, this had been going sideways. We're starting to break out, but we have been in this area before. So we want to see, can prices move back above where we're at now? The Wilshire, kind of the same thing. We were at the pivot point after Tuesday. We broke above that on Wednesday, and we reclaimed the 200-day moving average. You see kind of the positive things I'm talking about here? Then international, China just kind of floundering now. Being closed the week kind of messed up this indicator. We are seeing emerging markets headed lower. Europe, which had a really good day on Wednesday, well, it's turning ever so slightly, but it's still negative. Japan, same thing. It's turning a little bit, but we're seeing the S&P. It's starting to look like it could cross over, at least based on this indicator. Then this is another chart I haven't shown for a while. This is the all stocks index. Kind of takes all the stocks in the world and crams them together and measures them. And we had dropped below the 200-day moving average. We came back above that only to drop back down. Well, we reclaimed price above the 200-day moving average, and we're now at the 50. This is another inflection point right now. As far as the broad market, the dollar, it was down slightly on the daily chart, and we're still seeing some possible weakness and an overall uptrend. Oil, it was up slightly, about 1/3% on Wednesday. We're still below 90. So as these talks in Vienna, as we learn more what they're talking about and what's decided, that will really gyrate oil one way or the other. Gold had a good day, it was up 1/3%, but we're still going sideways overall. Silver also had a good day, coming up out of a low, but we're chopping around for the most part. CRB was up a little over 1%. And really, if the CPI comes in hot or higher than expected, you might see the CRB really shoot up higher. If it comes in weaker than expected, you might see the CRB coming down. Then Bitcoin, yeah, it's kind of near the 43, 44 level. I just show this just because it's kind of interesting to look at. We're still waiting to see how things will play out in that arena. As far as bonds, we saw a flat 30-year. We saw a decline in the 10, a bit of an advance in the 5, bit of an advance in the 2, and pretty much flat with the 3-month. Then just to show you this, just because I've looked at this chart for a few years now, only to see the German bonds go back positive with that increased stimulation or harder stimulating policy that they might do in the EU and in England. We're seeing the German 10-year bond actually go back positive finally. And then, but overall, when you take all the different bonds in the world and put them together as far as their price, we are seeing a real decline as interest rates continue to go up. Then our corporate bond index continues to weaken based on price, which means interest rates are going up as far as corporate bonds are concerned. So what can we take from all of this? Our outlook for Thursday, the technicals are mostly positive with a positive backdrop. And that's kind of the scenario that I've been playing out in numerous videos over the last few days. The long-term trend is up, but we're still seeing what could be weakness. Now, if the short and intermediate term really get some legs underneath it and start to go higher, that weakness could become pretty much irrelevant, or it might even turn back to showing some positive readings. We're still in the middle of earnings season. The battle continues between growth and value. We have the CPI coming out on Thursday, and then the geopolitical events that I've talked about before at the beginning of this video. So what's our conclusion? The S&P is now positive. We're possibly at a breakout to the upside, and I'm calling this an inflection point. We're seeing a lot of things coming together. And so maybe in Thursday's session, some of this can be decided one way or the other that helps us to make decisions in what we're trying to do. The short-term bias is positive. The intermediate term, that's really more positive than it is mixed. But because some of our indicators are a little bit slower right now, I kept that as mixed. And then the long-term bias remains positive, but could be showing some weakness. But then I also went through a number of charts in yesterday's video that talk about the positive backdrop that I've been referring to. So thank you very much. Have a really good Thursday. And I also included my email address. If you want to contact me, if you don't want to leave any comments on the videos, you want to contact me directly. And I do have a private Facebook group if that is something that interests you. So have a really good day, and I'll talk to you again after Thursday's session.